Welcome, everyone, to another TradeView Live episode. I'm here with our illustrious guest, Robert Kirk of Dun Bradstreet, Head of Analytics, Global Product, Dun Bradstreet. Quick introduction to what we're doing here. If this is your first episode of TradeView Live, we answer questions from the audience live for one, so feel free to be posting your comments and questions into the LinkedIn chat. That's going to pop up to us and we'll be able to address those directly. But we've also come prepared with a number of different topics and updates around what's happening in global trade, et cetera. We're talking a lot about the WTO forecast today as well. And we'll get rolling in just a moment, but I'd like to give Robert a chance to introduce himself and talk about his involvement in TradeView and talk about a little bit about his excitement for this topic.
Well, thank you, Kyle, and thanks for having us. My name is Robert Kirk. I'm with Dun Bradstreet, as you mentioned. My role is to bring new data scores, ratings models, and analytical data sources to the public and to the market in general. So I'm very excited to be here. I think the conversation of functional disruption, which is really uncertainty in the market and change, is a great topic because it's always happening. It's just happening at a much greater rate. It could be generative AI, or it could be administrative policies, or it could be geopolitical events. It all seems like it's all coming at us much faster and in a much more unique way. So the goal of the world is not to give more data to the world. The goal is now how to make that insightful. So I'm very excited about not only the opportunity to share our data with the marketplace, but also our partnership here to make that applied analytics really something people can use, take away, and ultimately dig beyond the headlines. Much of what we'll talk about and that you're set up to speak about today is the headline said, and now we can talk about what does that mean and what do I do, right? A lot of a headline conversation is fear-based, and now we can say, good news, there's something you can practically take away. And that's what I'm most excited about. So thank you again for having me.
Oh, it's our pleasure, Robert. Thank you for joining us. A quick little introduction before we dive into the topic. People ask, TradeView Live, what does that mean? What is TradeView? Well, TradeView is the industry-leading trade intelligence platform put out there by Vizion. It's covering 57% of all global containerized trade, 3 times more than any other platform. We've profiled 1.5 million companies in the data set, provided 90-day trade forecasts for each of them, identify supplier and product networks, and even built in AI researcher capabilities for getting your insights quickly. We offer different packages of TradeView depending on your needs, explore, intelligence, performance, and happy to have any side conversations in the future to tell you guys more about that. But to Robert's comments and to what we talk about here in TradeView Live, the question often is, where does the data come from? And the short answer is there's more than 270 different data sources that feed into TradeView, from ocean carrier data, booking data, AIS, satellite tracking of vessels, rail movements, et cetera. There's a host of different data sources that feed this intelligence into global trade. And that question is also, how can you forecast the future? Well, much of the data behind TradeView is ocean bookings. So bookings for containerized freight. And those are shipments that have not happened yet and will then be tracked actively in TradeView. So we'll see them from the plan stage, in progress stage, and the delivered stage. And that allows us to look 90 days into the future across all companies, all products, all locations, all trade lanes, et cetera. So that's how we can get very detailed forecasting, extremely accurate forecasting as well. Now, getting into the forecast, Robert, here we're starting some of the meat of our presentation, and we'd like to get going with our overview of what's happening in global bookings, U.S. imports, and China to U.S. bookings. This has been a staple of this TradeView Live series since starting it earlier this year, and we're going to give everyone the update here real quick. So this week of October 6th, global bookings, this is making sense to some degree. We're seeing a year-over-year change, down a little bit, a week-over-week change, up a bit. We're starting to get to that time of year where seasonality starts to kick in. So, and also this is that time of year where in China, and we'll see this in a moment, is in Golden Week, where it's effectively a week-long holiday, et cetera. China makes up a major portion of all global trade. So we see that kind of impact happening here in global bookings. So October 6th, row global bookings, week over week change up 10%, year over year change down 10%. Nothing seems too abnormal there right now based upon this time of year. Now for U.S. import bookings, we saw a slight tick up the week of October 6th, which is right before the recent announcements from China about the kind of retaliatory how should I put this, policies, and then the response from the Trump administration here in the United States. But year over year change, it was a nearly 20% drop, but a slight uptick week over week. And then finally here, this last section, the China to US booking. So a big week over week increase, a very sizable week year over year decrease. Again, some of this is going to be related to policy. Some of this is going to be related to Golden Week. This is that weird time of year where you see lots of ups and downs. And with the week over week and year over year changes, the numbers can fluctuate quite a bit. So there's the updates. Feel free to ask questions about this. We're happy to dig into it. And yes, we will share the slides publicly after the meeting. I see that question popped up here in the comments. Before I move on, any color you want to add to this, Robert? What's your read into what we see here?
Well, I think overall you've hit the highlights, right? Some of the things to immediately notice is that seasonality does play a big impact in national holidays, be it Golden Week in the Chinese market, or we're going to have Diwali in India. Those always have a big impact, and it's kind of important that we take that, but it's also important that we recognize that oftentimes we overlook it. So some of the things to look out for when we watch the headlines is cherry picking of convenience. And we've seen that from time to time in some of the announcements. So I think it's always good to think about things a little bit skeptically and cynically when we see these big percentage changes. I think you did an excellent job highlighting why it occurred, setting the stage, reporting the numbers as they are, but also putting it in context. And that's one of the big factors that we think about when we think about applied analytics is it's not only the content that's important, it's the context in which it sits. And when we start talking about global trade for many people that are uninitiated, the cultural highlights are really important. So we have 3 big holidays happening right now. We have Golden Week we're coming off of in China, Diwali in India, which will have a commerce impact as India continues to grow in size. And then obviously for those that are US based, we're going to have Thanksgiving. And that does show a functional slowdown as well. Thanksgiving is one of those non-secular holidays that seems to be relatively universal here in the US that everybody takes advantage of.
Thanks, Robert. Moving on to the next topic here. So daily container bookings from China to the US. We did identify here Golden Week. You can see that week of October 6th, really seeing a big drop, but then a jump up in the 7-day average. I'd also like to highlight, so the golden line here is the 7-day average, and the blue line is the actual TEU bookings we're seeing from China to the US. I would note that the jump up in the daily bookings, it does peak quite a bit. And actually, maybe I can get my my laser pointer here. It does peak quite a bit higher than what we were kind of expecting, seeing the behavior over the last handful of weeks. Perhaps that's a bit of a response to the policy changes and the chance with some of the more express services of being able to get some goods into the United States before November 1st. Is a very, very, very tight window to do so. It's about all the time you actually have. And I think there's also kind of a question of how that policy is going to be enforced around the November 1st date, et cetera. But we see a peak slightly higher than usual. But again, that Golden Week drop where effectively there's not hands at keyboards making bookings for ocean freight. And then we see a resurge trying to catch up. This could be a bit of the resurge, could be a bit of policy reaction. We'll see much more with our next TradeView live session where we're actually able to see the data and how it played out a bit more. I'm not sure if there's much more to add there because this is just a bit more of a deep dive into the previous slide. But Robert, anything you want to comment?
The only thing I'll say is, again, you've hit it spot on. Your pointer's sitting where the next conversation starts, and it's a little bit early to your point, and we got to be conscious of it. But you can see the rebound's already starting to happen with the early data, and it just reinforces some of the data sources you have and having that foreknowledge. So many other sources, you're waiting for that data to catch up. This second peak is already there in your data, and it's really cool to see. In another week, we'll have an even more pattern. And again, one data point doesn't make a pattern yet, but there's something to be said about that second highlight you have right next to your pointer.
And a wonderful point you're making there. This TradeView is very unique in the sense that so much of the data is bookings in the platform, which you can't really access many other places, and is very, very unique in the ability to look forward and what's going to happen. If you're looking at this type of data for China and the US, you're typically like getting a lag of 3 to 4 weeks, maybe 6, because that's the transit time, depending on the routing, et cetera. So this is the earliest indication that you can be getting of actual volumes as they're going to be moving across this trade lane. Digging a bit deeper, the weekly container bookings from China to US, we're looking at this year over year. You can see, that golden week playing out between the years, with orange being 2025, blue 2023, green 2024. And we're seeing the bounce back even for this week being, it's a lower volume than in the past. So maybe this is pointing to a different story there. Maybe this is pointing towards, hey, there isn't enough time to actually get that freight in the country before the November 1st, and people are reacting to policies. But we're going to need another week or two to truly see how that plays out in more detail.
Yeah, and again, the strong overlaps here, again, putting the data in context over time. When you think about it year over year, in this case, 2 years of history, we can see where we were 2 years ago from our relationship with China. We can see where 24 started to see some of these behavior changes, and maybe it's coincidental where that shift started occurring, maybe not. And then ultimately, 25 continuing that behavioral transformation. To your point, the spikes aren't as big and the recovery is not as strong. And the back half of this year tends to tell a story. I think it ties really closely to the projections that we've seen from the World Trade Organization and others that are now talking about um, the benefit that we got from the activity that's occurred, but also the uncertainty that's going to carry out through 2026 as we go forward.
And we've mentioned so much about seasonality so far. I just want to call out a few spikes that you can see on a recurring basis. So these drops here in the early part of the year are typically Chinese New Year, and that shifts a few weeks each year, so it can vary a bit. But then you see this next drop, which is typically the beginning of May, which is International Labor Day. A celebration that happens in a lot of countries outside the United States. And then here is where typically seeing this golden week play out. But if you're looking at this orange line 2024, you can see kind of get just a quick sense, even from like the area displacement. Ever since this April, May timeframe, we're just doing a whole lot less volume between the China and the United States, which I'm sure you've been hearing reported again and again in the news, et cetera. But it's truly showing through in the data.
Absolutely.
Now, that question emerges, if China's not shipping as much to the United States, where are they shipping to? And is it a net reduction, or have they been able to send those goods to other consumers, other buyers across the world? And so what we did is we pulled out the bookings for China to a list of different nations here. We have one column that is the bookings from January through October of 2024, the entire month of October. We're about halfway through October now, so we have January to the present date. So pretty comparable, but off potentially by about 2 weeks. And then we're seeing what are those year-over-year changes. So who are the recipients of large volumes of goods comparatively? And this could be partially on that topic of maybe there are buyers and there's a shift in terms of who's consuming those Chinese goods. But I think there's also a question here of who are the growing players in the reorganization of global supply chains. And we see, Thailand, Vietnam, Malaysia here at the top of the list. We were just sharing some information earlier this week or last week, if memory serves correctly, that Vietnam has surpassed China as the largest exporter of apparel to the United States now. And part of how that's playing out is there's quite a bit of material, cloth, being exported from China, going to Vietnam. Vietnam then turns essentially those materials into finished goods and is now shipping the United States. So perhaps that represents part of this 26%. Maybe another part of that 26% is also being represented in Vietnam is a growing economy. The quality of life is improving. I was living in Vietnam for the past few years, just moved back to the United States a year ago. And I can attest that you have a growing consumer base in Vietnam. So there is potential there. But my suspicion is this is primarily more due to the rejiggering of supply chains, et cetera. That same story should be playing out in Thailand, Malaysia. These are places where there's a lot of production of finished goods happening as capital has been invested by major brands and companies in the Western world, et cetera. But there's a few different losers here as well. Losers in terms of the year-over-year change reductions. We can see a massive reduction here for the United States, negative 14%. But when you look at that in terms of actual total TEU volumes, We went from 6 million to 5.1 million. That's nearly 900,000 TEUs of change there. That is a very, very, very large volume of product, et cetera. Another interesting one here is Mexico, and that's partially because of the relationship geographically between the United States and Mexico and what this might mean as well for the rejiggering of supply chains. With this reduction, I would assume this is not necessarily a reduction in consumer consumption in Mexico per se, perhaps more the sourcing of products from countries other than China for what does get turned into finished goods or repackaged in some way and sent to the United States. I think I hit the highlights so far, Robert, but maybe you want to add a few more color comments, and perhaps there are a few other countries here you want to point out specifically.
Well, I think I don't have a personal anecdote, so I don't get the Vietnam story, but I'll give you props for that, and obviously another personal thing to dig into someday for those on the line. But as we think about where we're going, right, the two things I'll highlight first is looking at the data in multiple dimensions is really critical. You hit on the TEUs versus the percentage, and usually the United States doesn't pop because of the volume, and it takes such a big change for it to even show up. So I think that was a critical highlight. The other is that with any change in policies or geopolitical structure or any functional change, commerce finds a way. And I think that's what's most interesting to me as we look around. So you mentioned Vietnam. We can look through some of the other European countries that have become gainers. And what we're finding is that there are players that are stepping into the market that are creating the connection points and that are also continuing to facilitate the consumption structure that plays out. What that means is that commerce finds a way, that there are buyers, and that there is a way to make the supply chain where we all win globally. But we have to understand how that impacts not only the transit of goods, but the number of players that are now involved. So sometimes that's a good thing because it expands the wealth and the expansion, to your point about the Vietnam culture. On other hands, it creates more risk that is introduced because we now have 3 or 4 counterparties where we might have had one or a consolidated group of counterparties in a single market. So that's the other thing I'll highlight here is that this can be a good thing and it can be another challenge for those that are dealing with supply chain conversations as their strategy plays out.
Thanks, Robert. Now, moving into the highlighted topic for this session of TradeView Live, talking about optimism going forward, talking about the World Trade Organization forecast for the future, et cetera. There's some interesting notes to share, and I've been leading so much of the conversation so far. So perhaps, Robert, you want to be able to take the lead on this next slide as we talk about the optimism report and talk about delivery time, delivery costs, concentration, et cetera.
Well, absolutely. And I thank you for the opportunity. Again, collectively, as you can see, both Vizion and DNB are data companies and making it useful. Prior to the World Trade Organization's report, DNB does a survey, and it just happened that we were preceding that event of global leaders in the finance and risk space. And we ask them a series of about 16 questions. We organize them into 6 categories. The goal is to get sentiment analysis. And so the framework in this one and the key takeaway is you can see that our optimism had its peak a little bit earlier this year in late last year. And since then, it's been steadily eroding across commercial leaders. And that uncertainty is really driven by change, right? Businesses like stability, businesses like continuity, businesses like understanding what's coming next. Those are 3 things that are currently unknown. And the change in the uncertainty is at an all-time high pace. And again, it's not only from the political spectrum, but it's also from the change in generative AI and what that's going to do to the marketplace. Obviously, trade leads to labor concerns and other activities. And then as we look at under the covers and at the next level of intelligence, you can see that those areas that Kyle called out a few minutes ago, concentration risk, supply chain risk, those are areas where we've seen some diminishment, much of that driven by in the verbatims when we go under the covers, the need to reallocate your supply chain, having to pick up new players, having to onboard new partners, having to think about restructuring the capital investment that you put into a certain market and move it somewhere else. Those things are all big plays. They all have downsides, most of which are reorganizing your plans and making change when you didn't plan for that change, right? It's all got a theme that runs through it, which is change driven by uncertainty or external factors that you're now reacting to. Businesses like to be able to plan a little bit farther out. They like to have certainty that their plans will have a positive return on investment, and they like to plan for the long term. And that's unfortunately where we see the disruption. The good news is this data helps open that door.
A quick detail question. Global Business Optimism Index. What year is the base year for the index? And
So,
or roughly, if you recall.
yeah, absolutely. So we've been doing this consistently now for 2 years. So it's only 2 years old.
Okay,
So the base year is 2023.
gotcha. Okay, so I'm assuming Q1 2023 is probably the beginning of the line, and that would be the 100 mark.
That's right.
Great. All right, now getting into the WTO Global Container Throughput Index. So this is starting to talk a bit more about the export and import volumes by region as it's played out from beginning of 2019 through the second quarter of 2025. So we generally are seeing in terms of exports, there has been, growth over time. A few declines, and of course we can see the impact of COVID happening right here. This is this big ditch in all of the lines. But in terms of some of the more interesting recent bumps and maybe declines, there's an export decline for South America, an export decline for the Middle East. Again, this is an index, all indexed back to 2019. So getting to see the relative growth, but we're also seeing the export increases, certainly out of Asia, which is expected. No, we're not separating this out to China versus other Asian countries, but we're seeing that play out. I think part of what's interesting here is the imports, though, and it's clearly this very strange pyramid shape here, where you have a massive amount of imports happening in the end of 2024, beginning of this year, and then a steep cliff. Part of this is front loading, part of this is responding to the trade wars, but we're not really seeing that shape with any of the other regions. So this is just more confirmation, I think, of what many headlines are talking about, et cetera. But there are a few other small, interesting things where exports from Europe have been relatively flat. So that's interesting when you talk about, when we talk about GDPs of the EU, et cetera, and how that's been playing out and where they've been kind of towing the line in terms of recession, et cetera. This is a major part of that story as well. Similarly, the CIS countries as well, relatively level. And then what's another interesting export kind of up and down story here is, Africa to some extent, but the volumes overall are not necessarily comparable to the other regions. But it is interesting to see this kind of relatively flat, but generally starting to trend up a little bit more to the right. And certainly on the import side, this has been playing out where it's been identified again and again that Africa has been a major consumer of volumes coming from China for goods that have now been discounted compared to what may have been getting sent to Europe or the United States, et cetera. So this import story here for Africa as a consumption and trend wise, you can see we have a little bit of a spike coming up following COVID. It levels off a bit and then it starts ramping up again, especially these last few quarters as we're dealing with the trade war, et cetera. We're also seeing, across Asia, but this can be a little bit of the rejiggering of how global supply chain networks are being reset up, redesigned in some way, shape, or form. And then the only other note I would add here as well is just, again, CIS. This is up and down craziness in some sense as it's played out. I don't even know if I have commentary on that, but Robert, your turn for the microphone.
Fair enough. I mean, I think you hit on high parts, but I love this slide for a couple of reasons. One is the change and transformation of the exporter to consumer markets for some of the key areas, and you've hit on many of them, but you can see how regions of the world have changed their behaviors from being a net exporter to stabilizing and become more balanced. You can also see how Asia has continued to have constant growth in their exports in spite of all the noise that's gone around it, right? Like we look at the left-hand side, that line is pretty uninterrupted. So it implies that there is something positive happening with either expanding the markets, the marketplace, the new players that we've mentioned, the desire of the economic engine to work in spite of all the disruption. And then the last piece is we think about where we're seeing consumption transform, those things becoming more balanced is very interesting. The last thing that I'll call out is even with the decline of the US on the right-hand side, the fact that it stayed above, and again, this goes back to reading beyond the headlines for me, It stayed above where it was in 2019. Again, I'm not saying that everything's perfect and we wouldn't want a more steady increase, but the trend line being relatively flat to slightly up feels better than what you would think if you weren't looking behind the numbers, right? And so that's one of the things that I'll continue to encourage this team, which is obviously interested in data, to continue to do. Be skeptical about the cherry picking and the baselines. Pulled it out on the global optimism on the index as well as this one. That index point is really important about how you consider things.
And a quick comment I should have said a moment ago when I was referring to the Commonwealth of the Independent States, which is the yellow line here. This effectively is when the Ukraine war went to full scale. So amazing drop in imports and a big jump in imports as everything was getting rejiggered. So that was a quick comment there. Right, TradeView imports by country 2019 to 2025. So we're looking at this in terms of the import volumes by region. As it plays out through the end of Q3. So we're looking at WTO stats at the end of Q2. Let's add an additional 3 months to that as well. And so North America, we're seeing the import volumes by region: Europe, Asia, South America, Africa. There is that decline with North America, and it looks like it's extending a little bit more in Q3 as well. So this line, I'd expect when they add another quarter to the right here, it's probably going to be staying at the same point and maybe just getting a little bit flatter over there. But it's something to be calling out as well in terms of the imports by country. And then we group those countries into the regions here as well for you. Now, that WTO report, the merchandise trade volume growth, contributions to trade volume by region. So this is their they're reporting for 2023, 2024. Their actuals for this year and their forecast for this year, and then their forecast for 2026. They're generally forecasting that the growth is slowing in terms of global trade volumes by the regions. Now, there's going to be a lot of different explanations for why that might be happening. And I'd say that, these kind of forecasts came out in the past year or two as well, signaling that growth is going to be reducing. And this also kind of follows the same path of that business optimism chart you were talking about a moment ago, Robert. But this is going to be interesting to see how it plays out, because everyone on the other side who is a little more of the other side of the story, who is a little, say, not forecasting the same kind of reduction in growth, has pretty much been proven more right by recent history in terms of the growth has continued. I'm kind of curious, Robert, from the D&B perspective, how are you guys interpreting what 2026 might look like? And we have this broken out also by some kind of key themes, et cetera, as it plays out across different industries and spaces. But before we get into this extremely detailed table here on the right, maybe we talk a little bit more here on the left about forecasts for 2026.
Well, I think forecasters always get benefit for being conservative or controversial. So I'll say that first. DMB overall is projecting that not only will we see growth this year, but it'll continue into next year. It'll be a muted growth, but it'll be growth. I think the drop on the US side is a little bit overstated as we look at the below the index line as you picked out. So all in all, I think there is a very conservative bias. I think the challenge for the WTO, in my humble opinion, is being able to revise their forecast up too far. And so they're trying to do it in incremental steps. I think when they do another forecast, it'll continue to move up. If you looked at some of the previous ones, it was much more aggressive on the decline. So having said all that, from an analytics perspective, the greatest phrase that encompasses this is all models are useful. All models are wrong, but some turn out to be useful is kind of my theory here. And I think it's always good to take multiple projections on this. But from a Dun Bradstreet side, to answer your question directly and come back to it, we think there's going to be continued growth in all markets. We don't see a net decline like this is projecting even on the trade side. But we do think that it's going to be modest growth in many of the markets.
And to your point that all models are wrong, but some are useful, we put this chart on the right here, this table on the right, with the recent announcement from JP Morgan Chase about a $1.5 trillion fund and investment opportunity for security and resiliency of critical industries. And they've identified, supply chain, advanced manufacturing, these sub areas, et cetera. This forecast was not put out with this knowledge of of a very, very major financial behemoth saying that they are going to be organizing a massive amount of investment into industries and infrastructure to keep the growth going. The question is, will this be deployed fast enough that it changes the 2026 number? I don't know. But it is very interesting to see that there are big bets being made on the opportunity of what is going to be a major rejiggering of international supply chains, value chains, et cetera. And for those who want to dig into this, there was a number of great articles already being written about this announcement of the $1.5 trillion initiative. That could be an entire TradeView Live episode by itself. But any comments you want to add, Robert?
Well, I think we're spot on, right? Like, I didn't want to bring it up too early, but where you went is where I'm thinking, right? There are a number of activities that are happening. If we ignore the AI bubble or conversation that's happening about if it's a bubble or not, is the reality is there's a material amount of investment that's occurring in other spaces. And to your point, the rejiggering of the supply chain, the reinvestment in US manufacturing, the reconsideration of funding. And it's not just talk anymore. We're seeing real action, real dollars being put up, fundraising. We can even expand into things that go a bit beyond the conversation today, like private credit and other areas of expertise that we have at Dun Bradstreet. There's a transforming market that's taking place that will create new opportunities that give us much more optimism as we think about the conversation we've had today. So I know I've thrown in some optimistic points of view. It's framed in data that goes not only about the trade that we've been talking about, but these other areas. And I think it's super critical that one of the challenges to everybody on the conversation is we have our areas of expertise from time to time. We need to make sure that they take into consideration the externalities of that expertise. So trade is going to be challenged, and that's very clear. But the operational commerce is not challenged, and some of the fundamentals are still there.
And just additional color on the growth trends, et cetera. We have this basic chart we're sharing with you guys also from the report that's looking back at the container throughput index and how that's relative to, I believe when this started was 2019. Yes.
2019 as well.
And generally seeing that, China, we're still seeing a good amount of throughput, but we see this dip as it played out, in the, this would probably be New Year. It's tough to tell with this chart because it's not as precise and high resolution as a lot of other charts. But I think the general story here is, throughput for containers is a representation of growth, and we're still moving up into the right, even though the breakout here are shifting a little bit from region to region. China called out specifically, excluding China, et cetera. But what I really wanted to focus on was some topics that were popping up more recently with in the ocean freight world, the decline of freight rates, specifically from India to Europe. And we're trying to look at that from the daily bookings volumes of India to Europe as well. And how has that been playing out since the beginning of September with the recent kind of collapse in rates? I have a longer LinkedIn post about this. Please go check it out on my profile. I believe we also have it on the Vizion profile. But there's a list of complexities here between capacity changes, between softening demand, between also seasonality. So we're talking about Diwali as well, and what's that going to be doing to it. But generally speaking, we've seen a kind of a collapse in rates from India to Europe, but we haven't necessarily seen much of an impact in terms of the volumes right now. So it's an interesting story that's going to be playing out in the next few weeks. So please stay tuned, but wanted to give a quick update on that. And I think we're getting close to wrapping up our time here as well. So just making sure we're not going too overboard for anyone. We're just a few minutes over. So I'll just give a quick few comments. These are following up on questions from previous TradeView episodes, questions that different viewers sent in and wanted some more details. So Vietnam to US, HS code 61, apparel. So giving the year over year trends for that as well. Saw a massive spike in week 39. There's a story to be dug into there as well. But generally speaking, you can see that the orange line for this year is generally a much larger area than it has been the past 2 years. So speaking back to that growing strength that Vietnam has as a major apparel exporter to the United States. Additionally, soybean exports to China, so a major consumer of soybeans. This is dropped a lot. This pattern this year is a very interesting pattern that's playing out, something that deserves more conversation, etc., more digging into. We're going to be working on this topic for a number of future articles we're going to be putting out, but just want to give some data on that because we've been getting questions around the soybean exports, seeds and fruits HS code 12 as well. And then I think this is the last one. Yes. Coffee import bookings to the US. So this has been interesting as the tariffs have played out, especially with Brazil being the largest supplier of coffee globally, and especially the US being a major consumer of coffee. Just seeing how this has played out over the last few years compared to what's normal, compared to what was happening earlier this year. And potentially there's one part of the story about what the cost to import coffee are growing, but a lot of those costs are being passed on directly to the consumer. And there are quite a few businesses out there who have been marking up the price of buying a bag of coffee greater than the tariff rate effectively on the importing of it. So there's been a little bit of an opportunity for these companies to make a bit more margin on these situations. But it's been very interesting to see how this has collapsed the last bit of time in the past, but how is this playing out now, et cetera. So wanted to share this chart for everyone to digest and start conversation around. If you guys are reading something else into this chart than we are, please leave those comments, et cetera. But doing a quick check here to see if there's any other questions. I think we're good to go on Q&A. Anything you want to close us out with here, Robert?
I think the highlights I'll leave with is, first of all, thank you for the time. Thank you for having me. And thank you for joining us live. But as you looked at this information, the soybeans, obviously a big storyline. We'll have more to come on that one. It's a conversation starter. The only thing I'll leave you with as a cliffhanger is it's not as optimism as commerce finding a way as some of the other topics that we've talked about. So there will be some discussion about what it means long term. So there are things that have residual effects as you drill in your other markets. And then the level of granularity that Kyle has shown is a great story. So as you think about the two dimensions of your jobs today, part of it is putting it in context of the global, part of it is putting it in the practical application. So hopefully you walked away with something useful. If not, do put it in the comments, ask us questions. These events are a great opportunity for us to highlight what's available, but also talk about what we're seeing at scale so we can put your activities in an applied application conversation. So thanks again, Kyle, for having me.
Oh, it's our pleasure, Robert. Always looking forward to our conversations, which you and I talk on almost weekly basis. So there's always something happening to be digging into in terms of the data, but look forward to having you guest again in the future here on TradeView Live. And again, if you guys have any questions about TradeView, you want to get access to the application, you want to be able to kick the tires a bit, feel free to reach out via visionapi.com. We're happy to get you demos and get you access to the product. So thank you all for your time. Signing off.